Between February and November 2024, the world's wealthiest individuals sold over $50 billion in stock. Not quietly, not gradually, in massive coordinated transactions that set off alarms across Wall Street. Jeff Bezos sold $13 billion in Amazon. Mark Zuckerberg sold over $9 billion in Meta across multiple transactions. Jamie Dimon, CEO of JPMorgan Chase, sold stock for the first time in his entire 18-year tenure as CEO. Larry Ellison unloaded $3 billion in Oracle. The Walton family dumped $2.3 billion in Walmart. And Nvidia insiders, riding the AI boom to all-time highs, sold over $1.2 billion while telling the public, the best is yet to come. This isn't portfolio rebalancing. This isn't estate planning. This isn't tax optimization. This is an exodus. The smart money is running for the exits. And they're doing it at the exact same moment using the exact same playbook they used in 2007, right before the financial crisis destroyed $16 trillion in wealth and crashed the market 57%. Here's what most people miss. These aren't ordinary investors. Jeff Bezos built Amazon from a garage into a $2 trillion company over 30 years. He's lived through the dot-com crash, the 2008 crisis, COVID, and never sold like this. Jamie Dimon has been CEO of America's largest bank since 2005. He survived 2008. He's seen every crisis. And in 18 years, he never sold a single share until now. These men don't panic. They don't make emotional decisions. They operate on data, analysis, and information that you and I don't have access to. And right now, that data is telling them something terrifying. Get out. Let me show you exactly who's selling, how much, the 5 historical patterns that prove insider selling predicts crashes with near-perfect accuracy, what metrics these billionaires are seeing that the public doesn't, why 2025, 2026 is the most dangerous setup since 1929, who will get destroyed, who will profit, and what you can do right now to position before the cascade begins. Because this isn't a prediction, this is pattern recognition. And the pattern says we have 6 to 18 months before everything breaks. Before I show you the specific sales, you need to understand what insider selling actually means and why it matters. Insiders are corporate executives, board members, and major shareholders who have access to non-public information about their companies. When they buy or sell stock, they must report it to the SEC within 2 business days. These reports are public. Anyone can see them, but most people don't look. Why does insider selling matter? Because insiders know more than you. Jeff Bezos doesn't just see Amazon's quarterly earnings report like you do. He sees daily sales data, margin trends, competitive threats, and internal forecasts. Problems developing before they ever hit earnings. Jamie Dimon doesn't just read about the economy. He sees JPMorgan's loan default rates in real time, commercial real estate delinquencies, credit card charge-offs, and corporate bankruptcies. This is non-public information that won't appear in the news for months. And when insiders see trouble coming, they sell. The data on insider selling is tracked by multiple firms. The most comprehensive is the Washington service, which has tracked insider transactions since 1975. They calculate the insider sell-to-buy ratio, which measures how many dollars of stock insiders are selling versus buying. A healthy ratio is around 2.1 to 3.1. That means insiders sell twice or 3 times as much as they buy. This is normal. Executives get paid in stock. They diversify by selling some and keeping most. They have personal expenses, taxes, estate planning. A 2.1 or 3.1 ratio is business as usual. But when the ratio spikes above 5.1, it's a warning. When it hits 8.1 or 10.1, it's a screaming alarm. And in 2024, the ratio hit 9.1 for the year. In certain months, it spiked to 12.1. Insiders were selling $9 of stock for every $1 they were buying. This is the most extreme imbalance since 2007, and we all know what happened in 2008. Now let me show you the specific names and numbers, because the scale and coordination are unprecedented. Jeff Bezos, Amazon. In February 2024, Bezos announced plans to sell 50 million Amazon shares. The stock was trading around $170, $175 per share. He executed these sales throughout February and March 2024. Total value, approximately $8.5 billion. Then, in July 2024, Bezos filed another selling plan for 25 million shares. Amazon was trading around $180, $190. He executed these throughout the summer and fall. Total from the second round, approximately $4.5 billion. Combined 2024 sales, over $13 billion. Let me put this in context. Bezos founded Amazon in 1994. For 30 years, he's been the largest individual shareholder. He has sold stock before, but never at this scale and never this fast. His previous largest sale was in 2020, when he sold about $10 billion over the entire year to fund Blue Origin. That was spread across 12 months and during the COVID recovery when stocks were cheaper. The 2024 sales were different, massive and concentrated at all-time highs. And his public explanation? He moved from Washington to Florida to save on state income taxes. Bezos has been a billionaire since 1999. He could have moved to Florida any time in the last 25 years. He chose 2024 When Amazon is at a $2 trillion valuation and the market is at records. This isn't tax planning, this is market timing. Mark Zuckerberg, Meta. Throughout 2024, Zuckerberg executed multiple stock sales under pre-arranged 10b5-1 trading plans. In January, he sold $200 million. In February, $400 million. In March, $550 million. The sales continued monthly. By November 2024, Zuckerberg had sold over $9 billion in Meta stock. This is notable because Meta's stock more than tripled from its 2022 lows of $90 to over $500 by late 2024. The company's market cap surged past $1.3 trillion on AI hype and efficiency improvements. And at the peak, Zuckerberg is selling billions. The official explanation? Funding the Chan Zuckerberg Initiative, his philanthropy focused on education and health. But Zuckerberg controls Meta through supervoting Class B shares. He has 61% voting control with only about 13% economic ownership. He could hold his stock forever, maintain control, and fund philanthropy by borrowing against his shares at 3 to 4% interest. Instead, he's selling at the fastest pace of his career, converting Meta shares into cash precisely when the stock hits records. That's not charity, that's exit timing. Jamie Dimon, JPMorgan Chase. This is the most significant signal of all. Dimon became CEO in 2005. For 18 years, through the 2008 financial crisis, the European debt crisis, COVID, every market crash and recovery, Dimon held every single share of JPMorgan stock he was granted as compensation. He preached long-term ownership. He told investors that CEO stock sales signal lack of confidence. He structured his own compensation to be 80% in stock to align with shareholders. He was the ultimate believer. In 2024, that changed. In February, JPMorgan disclosed that Dimon would sell 1 million shares. The stock was trading around 155, 165. Total value, approximately $160 million. The official reason? Estate planning and diversification for his family. Jamie Dimon is 68 years old. He could have done estate planning in 2010, 2015, or 2020. He chose 2024. And here's what makes this terrifying. Jamie Dimon has more information about the real economy than almost anyone alive. JPMorgan is the largest bank in America, with $3.9 trillion in assets. Dimon sees everything. Loan defaults, commercial real estate delinquencies, consumer credit quality, corporate bankruptcies, small business failures, in real time. And for the first time in 18 years, he's selling. That's not estate planning, that's a fire alarm. Larry Ellison, Ellison, co-founder and chairman, sold approximately $3 billion in Oracle stock during 2024. Oracle surged on AI infrastructure demand. Every company building AI needs databases, cloud services, and computing power, and Oracle provides all three. The stock went from around $80 in early 2023 to over $140 by late 2024. And at the peak, Ellison, who has been with Oracle since founding it in 1977, is selling billions. Ellison is worth over $150 billion. He's one of the richest people alive. He does not need liquidity. He's selling because he knows Oracle at $140 is overvalued relative to the company's real growth trajectory. The Walton family, Walmart. In 2024, various members of the Walton family sold over $2.3 billion in Walmart stock. Jim Walton sold $1.5 billion. Alice Walton sold $500 million. Rob Walton sold $300 million. These are the children of Sam Walton, who founded Walmart in 1962. The family has held stock for over 60 years through every market cycle. They rarely sell significant amounts because Walmart is the family legacy and a reliable dividend machine. But in 2024, all three siblings executed large sales within months of each other. Walmart stock hit all-time highs above $80 per share. The family is cashing out Nvidia insiders. This is perhaps the most blatant example. Has Nvidia stock exploded on AI hype, rising hundreds of percent in less than 2 years? Insiders sold more than $1.2 billion in stock in 2024 alone. Executives sold while going on CNBC and telling the public that the best is yet to come. The pattern is unmistakable. The most successful operators of our generation, people who built trillion-dollar companies, people who held for decades, are all selling at the same time. That's not random. Total insider selling in 2024 reached approximately $464 billion. The only year higher on record was 2007, at around $650 billion. Let me repeat that. 2007, the year before the worst financial crisis since the Great Depression, is the only year in history with more insider selling than 2024. And 2025 is on pace to exceed even that. Now let me show you the 5 historical patterns that prove insider selling predicts crashes. Because this isn't coincidence, it's statistical reality. Pattern 1. Insiders sell 6 to 18 months before major market peaks. In 1987, insider selling spiked over 350% in the first half of the year. The market peaked in August. It crashed in October. In 2000, insider selling hit records in late 1999 and early 2000. The Nasdaq peaked in March 2000, then fell 78%. In 2007, insider selling reached $650 billion. The market peaked in October 2007. The S&P fell 57% by March 2009. The pattern is consistent. Insiders sell while prices are still rising. The public keeps buying. Months later, reality hits and the collapse begins. Pattern 2, when the sell-to-buy ratio exceeds 8.1, a crash follows. Since 1975, every time the insider sell-to-buy ratio exceeded 8.1 for an extended period, a major crash followed within 24 months. In 1987, it hit 9.1, crash followed. In 2000, it hit 11.1, crash followed. In 2007, it hit 10.1, crash followed. In 2024, it hit 9.1, and in some months reached 12.1. There are 0 false signals in 50 years. Pattern 3, insiders sell first in the most overvalued sectors. In 2000, tech insiders sold first. Tech crashed the hardest. In 2007, financial insiders sold first. Financials crashed the hardest. In 2024, insiders are selling tech and financials again. Nvidia, Meta, Amazon, Oracle, JPMorgan. That tells you exactly where the bubble is. Pattern 4, when the strongest holders sell, the top is in. Bezos at Zuckerberg, Dimon at Ellison, the Waltons. These are not traders. They held through multiple crashes. If they are selling now, it means they believe this is as good as it gets. When the legends turn into sellers, the top is forming. Pattern 5. After massive insider selling, new highs do not occur for years. Every time insider selling exceeded massive thresholds, the market either crashed or entered long-term stagnation. After 1987, it took 2+ years to make new highs. After 2000, it took 7 years. After 2007, it took 6 years. If 2024 follows the same path, the market likely will not make new highs for at least 3 to 5 years. We are either at the top now, or within months of it. Now let me show you what the billionaires are seeing that the public isn't. The Buffett indicator is flashing extreme overvaluation. It currently sits near 185%. Historically, anything over 150% is a bubble. Mean reversion implies a 40-50% decline. The Shiller P is over 34, only exceeded in 1929 and 2000. Both followed by historic crashes. Margin debt is near record highs, 950B. High leverage means forced selling when prices fall. Commercial real estate is collapsing. Offices are 40-50% empty. Refinancing is impossible for many owners. Corporate debt is exploding. $4.7 trillion must be refinanced at much higher rates. Defaults are coming. The U.S. debt spiral is unsustainable. $36 trillion and rising. Printing is inevitable. Internal company data is deteriorating. Growth is slowing, margins are compressing, demand is weakening. Insiders see this before the public ever will. They're not guessing, they're exiting based on data. The timing window based on history points to a major decline beginning between Q3 2025 and Q2 2026. The trigger could be anything: a bank collapse, a CRE crisis, a debt default wave, a geopolitical shock. Once it starts, margin calls, algorithmic selling, panic, and forced liquidation accelerate the fall. Stocks could drop 30-60% within 6 to 12 months. And here's who wins: the billionaires who sold at the top. Bezos sells at $180, buys back at $90. Doubles his shares. Zuckerberg sells at $500, buys back at $250, doubles his stake. Dimon sells at $160, buys back at $95. 50% gain on the round trip. And that's how wealth is really built. This is the game. Sell high, wait for the crash, buy low, then increase your stake. The billionaires who sold in 2024 will be far richer after the crash because they'll own more shares at much lower prices. People who hold cash and gold win. Cash is dry powder. When stocks fall 50%, your cash buys assets at half price. This is how generational wealth is created. Not by panic selling at the bottom, but by buying quality assets at distressed prices. People who hold cash and gold win. Cash is dry powder. When stocks fall 50%, your cash buys assets at half price. This is how generational wealth is created. Not by panic selling at the bottom, but by buying quality assets at distressed prices. Gold preserves purchasing power. When the crash comes, the Fed will print trillions to save the system, devaluing the dollar. Gold will hold its value. Those who allocate 10 to 20% to gold protect their wealth, while stock-only investors lose 50%. Short sellers can win big. Michael Burry made $700 million in 2008. John Paulson made $15 billion. Bill Ackman made $2.6 billion in 2020. But shorting is extremely risky. You can be right about the crash and still lose everything due to bad timing. Most people should not short. The middle class loses the most. Their money is trapped in 401ks, retirement accounts, home equity, and savings. A 50% crash destroys decades of work. A 65-year-old with $800,000 becomes someone with $400,000, and no time left to recover. Pension funds collapse, municipalities go bankrupt, insurance companies fail, everything is interconnected, and everything falls together. Leveraged investors are wiped out. Anyone who borrowed to invest is destroyed. This is a massive wealth transfer, from the unprepared to the prepared, from the middle class to the wealthy. So what should you do? First, reduce equity exposure. If you're 80% in stocks, drop it to 40, 50%. Raise cash. You might miss some upside, but you preserve capital if the market crashes. Second, put 10-15% into gold, physical or ETF. It is insurance against monetary chaos. It doubled after 2008 and surged again after 2020. It will rise again. Third, make a buy list now. Apple, Microsoft, Visa, Costco, Johnson & Johnson. When prices fall 40-50%, deploy cash into quality companies at half price. Fourth, don't short unless you are an expert. The billionaires are mostly selling, not shorting. Timing is everything. Fifth, protect your income. Build a 12-month emergency fund. In a real recession, jobs disappear fast. Sixth, prepare psychologically. The crash will be terrifying. Media will run panic 24/7. Your accounts will drop 50%. That's when you must buy, not sell. The billionaire exodus is real. Over $464 billion in insider selling. The sell-to-buy ratio is at 91, the most extreme since 2007. The Buffett indicator is above 185%. Shiller PE is at 34, record margin debt. Commercial real estate is collapsing. Corporate debt is in crisis. Federal debt is exploding. This isn't random. This is a pattern. The same pattern as 2007. Heavy insider selling always comes 12-18 months before the crash. We are in that window right now. Q3 2025 to Q2 2026 is the danger zone. Bezos sold $13 billion. Zuckerberg sold $9 billion. Jamie Dimon sold for the first time ever. They aren't wrong. They're early. If you see the pattern, you have a choice. Ignore it and hope you're lucky, or recognize it and prepare. Reduce equity, raise cash. Hold gold, build your list. Strengthen your mind. Because over the next 12 to 18 months, everything will change. The billionaire exodus has begun. The pattern is clear. The crash is coming. Position yourself accordingly.